bank savings offer you less return on your investment. It also offers you stable returns through interest. Properties provide higher return through rental income and property appreciation. If you buy a property 2-3 years down the line, that property may have gone up by 10, 15 or even 20%. So you make money that way as well. Let's now look at the £30,000 that we have. Either we can use it to get the bank to pay us interest every single month, or we can use that same £30,000 to invest in real estate, or some people call it property. Let's say that £30,000, we've used that £30,000 now to buy an investment property. So in order for you to be able to buy an investment property in the UK, you'd have to kind of have a deposit down in order to buy that property. Let's estimate we went on and got a £100,000 property. We would have put down 25% to buy that £100,000. Let's say the £5,000 would be legal, transaction cost, stamp duty. That then gives us the £30,000. The average rental price for a £100,000 property would be, let's say, £1,000. So £1,000, if you're doing properties, that's what would be your gross rental income. We've got our mortgage interest to pay here, assuming that our interest is at 5% per annum. Our monthly interest payment would be £313. Okay, and then obviously we have our running cost. In essence, we have our repair and maintenance and management fees to pay. Let's estimate that to be £200. Okay, £200. So if we minus £313, £200 from the £1,000, that will leave us with a net profit of £488. So we make £488 every single month for investing only £30,000 in buying an investment property. Let's now look at it the other way. Suppose then we put that property in a bank savings account or ISA account, whatever that may be for you. The current going rate is about 5.5% per annum for savings and ISAs out there. Okay, so with that £30,000 at 5.5% interest rate, we'd have a monthly income of £138. So in essence, we'd have a monthly income of £138. So that would be our monthly income. So if you compare this to here, you would see the difference. So let's look at the annual, because that's one, it would motivate you and get you to understand a lot more how you can make that 30,000 work a lot more harder than putting it in this bank. Okay, so if you times that by 12, that will give you an annual profit of £5,850. Okay, and then for this one also, the interest you receive every single month, which is £138, if you times that by 12, it gives you £1,650. So again, have a look at that. You can see then it is no-brainer to obviously invest in property versus leaving that money in the bank, making you only £1,600 per year versus investment property that will give you £5,850 every single year. Looking at the analysis, we make better return on investment properties than putting money in the bank and make interest from them. However, it is important to discuss the risk that is involved in buying an investment property versus leaving your money in the bank or in an ISA account. When it comes to investment properties, obviously you've got the risk of tenants not paying you the rent, for example, and also it is not a liquid asset. it takes time for you to be able to sell the property to get your £30,000 back or to make any profit from it. And then obviously it's not something that you're going to go walk in quickly and then get the money from it. Whereas if you're looking at your savings, if you want that £30,000 now, you can walk into the bank, ask the bank for the money, the bank will give you the money straight away. And obviously it is liquid, you can get it whenever you want to get it. It is also safer than buying an investment property. So hence the reason you can see the interest reflect the return you get as well. Okay, and also when it comes to saving money in the bank, also the downside of that, one, the return is very, very low, as you can see from the analysis here. And secondly, the interest rate doesn't normally include inflation. So if inflation is, say, 7%, for example, and you're getting 5.5% on interest, you are net about 2% down. In essence, your money is depreciating in value more than what you're getting. So this £138 is not really a money that you're making, because looking at inflation, you're actually losing in real life, because that £138 will not buy you the same amount of items you bought today in about a year's time. So in essence, you're losing that way. However, if your interest you're getting is more than the inflation, then you may be making a bit of money there. Suppose inflation is say 5% and your interest is 7%, you're making 2% difference. Again, that's how much you may be able to make in order for you to be able to make a little bit of money from that. But the beauty about property, and one, obviously you've got the risk, you've bought that, but the beauty of it, you've got someone paying for the debt every single month, paying you £1,000. From that £1,000, they get you to pay the interest. They pay for your interest. You make that £313. And then they also pay for your expenses as well. You pay for that expense and you make a handsome £488. Again, if you don't know what you're doing, or perhaps you don't know how to manage properties, you don't know how to manage tenants, this cost you see here is literally for that. You can buy the property, give it to an agent to manage it, and you don't have to worry about any sort of problem with tenant or sort of maintenance. We can get the agents to do all that for you. And the beauty of investing in property also, it hedges against inflation. While inflation goes up, guess what? Your rent goes up, as well as the value of your property also go up. So in essence, the more the inflation increases, the more value your property and your rent would go up. You may be thinking, how does my rent go up? In essence, once you've got your tenants moved into your property, you're going to give them 12-month contract. So after the 12-month contract expires, obviously you're going to go and look at inflation, look at interest rate, and then obviously you increase your rent accordingly. Okay? And whilst your interest rate is still the same. So in essence, you tend to make more money as well when you increase your rent. And now let's look at the tax advantage as well. With real estate or properties, you still get tax benefit as well. So you can deduct all these expenses and then pay minimum tax. However, if you're doing an ISA as well, sometimes the government have these tax exemption ISAs and all that sort of things, so you're not going to pay any tax on your ISA savings. It's only because you don't make lots of money, okay? The bank will use that money, lend us as investors to make this serious money, and then they use the money we pay them here to give you a little return from that as well. So it is a massive tax benefit here as well by investing in property. So savings from the bank do not require you to do any management. Obviously, just put the money in there and then you get your interest payment every single month. But when it comes to property, you may want to manage it if you wanted to manage it, or maybe if the agent is managing it, they may ring you to find out what you want them to do if there's any issue with renovation work. It takes about maybe 30 minutes or an hour a week, but that hour or 30 minutes a week or month worth that amount there, because obviously making you £488 every single month. Now there you have it, bank and property. Which one do you choose? For me, based on this analysis, based on my due diligence and all the stuff I've done with you on this video, I will go for properties whole day long, because it makes my money work a lot harder for me instead of relying on £138 every single month. So this is a no-brainer. I'm happy to take all the risk involved in buying an investment property, even if I have to pay a coach or a mentor to help me, mentor me to make this sort of return in my investment. I will do it whole day long. So there you have it. There it is, saving versus real estate. I will go for real estate whole day long. If you'd like to learn how to implement strategies like that, there's a link on this section below. Click on that link, book one of my specialists. They will talk you through the best way we can work together to help you start investing in properties and make your money work a lot harder for you. I really hope this video has been helpful. If it has been helpful, smash the like button below, subscribe to my channel for more amazing videos. I look forward to sharing the next one. Thank you.